Alright guys, welcome back in this new video. So in this video, we're going to take a look at a trade that I took last week on GBP yen. I cut about 200 pips on this pair and we will see how I did this. We will look at the fundamental analysis and the technical analysis. So it's a trade breakdown video and I'm sure that you guys will learn a lot in this video. So make sure that you stay until the end of it because I will give a lot of value throughout the whole video and really explain everything that I was looking at. So this will be quite interesting. Also keep in mind that normally these videos are reserved for the course. So this time I thought of why not just record this video and post it for free on YouTube. But normally all the trades that I take are covered inside the private group that we have. So if you guys are interested in that, you can check out the first link in the description box below. And it's going to bring you over to my website. And this is where you will find all the information about the course and how you can join us. So with all of this being said, let's actually get right into it. Just before that we start, don't forget to leave a like under the video. It really just supports the channel and it shows me if you guys want to see more of these trade breakdown videos in the future. All right, so enough talking, let's look at this trade. So first of all, let's begin with fundamentals. I'm going to put you guys a bit in context here on the daily chart. It's really important to do, and then you will see how everything played out. So this was the COVID crisis that we had last year. So big sell-off at the beginning. Then we had the recovery phase. So GBP yen went into an uptrend because of the fundamental reasons that we had behind it. GBP was a strong currency, yen was a weak one. So we had a nice uptrend on this pair. And so as you guys can see, this uptrend at the beginning was quite slow, but here toward the end, it really got more aggressive. And around these levels here, it started to be more and more overextended. And at some point, we will need a pullback, which is a perfect normal thing to happen on markets, right? So overall, you know, this is the fundamental context. If we really keep it simple like that, well, that's what we have. And so now if we try to match the technicals with what I've just explained, well, let me show you guys a few of the technical things I was looking at. So first of all, we had a big trend line from here to here. Let me just put this white so we can actually see it. So we have this trend line going on, right? So this is from 2007, this is from 2015. And as you guys can see, recently we came back around here. So this is a very long-term trend line that I was looking at for a potential place where this uptrend here could stop. And around this level here, we also had this level there as well. So this was kind of an area of what I was looking at. And then if we come back here, another trend line was this one here, right? So this trend line kind of indicate us this uptrend here. And then if we clone this line and we put it here, we can see that we have kind of this trend channel here with a uptrend line right there, which was respected in number of time. And so if we put all of these technical tools together, well, what we can find is that around this area here is really where I was looking for a potential move to the downside. Now, one thing that is really important as well to understand is that I'll never just take a trade for technical reasons. I always need fundamentals to be aligned with my trade. And around these levels here, I really had no fundamental reason to sell this pair. So I did not take the trade there. I took it around here, but we will see this as we go through the video. So if we keep going, another technical tool that I was looking at, if we zoom in a bit, was a trend line from the beginning of the year. So taking this low here with this one here, right? And it gives us this trend line here. And if we look at the indicator, so I have the RSI right here, we already had overbought around these levels, but more importantly than that, we had divergence, right? So this was going down while prices was still going up. So overall, all of this to say that in terms of technicals, around these levels here is really where, to me, the pair started to look overextended because we had reached many important levels and the RSI was also starting to diverge from the price. So on the long term, right, on the daily chart, around these levels here is really where I thought that we might get a bigger pullback. But as I said, I needed, first of all, a fundamental reason and a technical breakout. So these are two things that I always look for. And so as you guys can see, when we reach around these levels, the price did not do much, you know, for a number of weeks until here it started to break out. And so this is because of what happened Wednesday with the Fed. so the last Wednesday, right? And what happened is simply that the Fed really turned more hawkish. Before that, they were dovish. So they had a monetary policy which were in place, and they were basically saying that they would keep rates low for a very long time. There was no reason to taper their quantitative easing program, and so all of these things, right? If you guys are a bit familiar with fundamental, you already know all of this. And Wednesday, what happened is that they basically turned more hawkish. So they kind of hinted, a potential rise in interest rate at some point in the future. That was sooner than expected. Basically, they said that at some point they would have to cut back on their quantitative easing program, that it was the meeting that they were really starting to think about that. So, they really started to kind of shift their fundamental idea, and markets really moved big on this. We had a big push to the upside on the USD. The stock market went down, commodities went down. So, overall, everything moved really sharply. And we basically had a counter trend move on all the trends that we had since COVID, which is why I put you guys in this context at the beginning of the video. And so what that means is that if we have a counter trend move of the moves that we had since COVID, well, it means that GBP yen could go down. So the GBP would turn to a weak currency and the yen would turn to a strong currency for it to be a safe haven, as it usually is, especially when, for example, the Fed would turn hawkish. Okay, so that's kind of what that was kind of the catalyst, if you want, in terms of fundamentals. So this is really what started to move the market. So here I had my fundamental reason to short this pair, and then the technical reason was not super complicated. So if you go now on the 4-hour chart, which we can see here, I want to add two trend lines. So we can add this trend line right here. So as you guys can see, this trend line was respected a number of time, and also this one right there. Okay, and so as you guys can see, so the FOMC meeting was around here last week. Okay, and as you guys can see, before this meeting the pair was really not doing much, and that makes sense because there was no fundamental reason to make any move on this pair. So the market was just kind of waiting for a reason to move. Okay, and so as you guys can see, especially around here, the price really started to kind of squeeze between these two trend lines, and at some point it will break lower. So the FOMC meeting was right here with this candle. It did not move that much at that moment, specifically on this pair. We had more movement, on the USD, for example, but I knew that when the USD moves, it affects all the other currencies. So by default, I was expecting a move lower on GBP yen. So it went down a bit. We had a correction here, then it started to break lower. And where I was interested in getting in the trade was not around here, because we still had this long-term trend line since the beginning of the year that I showed you guys before. But then when it broke under this trend line and under this level right here, this is where I got short on the market. So around these levels here. And I had a stop loss above the high of the day, which means right here. Okay, so this was my entry, this was my stop, and in terms of the target, we need to go back on the daily chart. And one thing that is quite important for you guys to understand is that institution and hedge funds love to look for moves in similar sizes to other moves that we had before. And so if we look recently since the beginning of the year, right, we had a couple of pullback on this market. And so what we can do is actually measure these pullbacks, and we will see something very interesting. So we have about a 2% pullback here. We have about, slightly higher than 2%, but around there as well. And this one, same thing, around 2%. Okay, so we can see that the range of these pullbacks was between 2% to about 3%, right? So what does that mean? That means that I'm looking for the same size of the move. And so if we measure from this high to this low, what do we have? Well, we have about the same size, right? Is it a surprise? No, it's not. That's what I was initially looking for, and you will see how it helped me set the target. So I was looking for anything around kind of these levels here, because the percentage matched these pullbacks right here. And so now if we add a few more technical layer to this, if we add a Fibonacci from this point to this point, we will see that the 61% retracement comes around these levels here. And what I was mainly looking at was this level right there. So we can see that it was really important. We can even draw it all the way to here, right? So this level had played many times in the past. So this was the area that I was looking for. So we had a February retracement, we had this level here, and we had the 100 moving average that was also around these levels here. So this was the target here that I was looking for as the first target. And so as you guys can see, well, it really did not take a long time. So I went short here, and already basically 2 days after, right, pretty much, the price reached my first target at 152 right here. And yeah, that was the trade. So I got out of the trade at 80% around these levels. I decided to let a 20% of the position open in the case that it would run lower, because I was also looking at other targets that were lower, such as this level here, or maybe even this more long-term trend line that we have right there, along with the 200 moving average. So this is in the case that the move really gets big and that we really get a long-term shift in the trend. So that's the reason why I decided to let 20% of the trade run, but I already closed 80% of the trade at this level here. So as you guys can see, that was a really beautiful trade. So getting in the sell at the best time here when it broke out, great stop level, and the target, as you guys can see, played out perfectly. So we reached the target, we went down just a bit more, but then after that, as you guys can see, it already is reversing quite hard actually. So getting out of the trade here was really the best option. And as you guys can see, it really did play out nicely. And the last thing here I would like to mention for this trade is simply that, as you guys know, the way that I trade and the way that I look at my trading account is very similar to having a portfolio. So I have many long-term positions, and these long-term positions were affected more negatively by the event that we had on Wednesday with the Fed. And this trade also provided a great edge to these trades. And so overall, if I look at this whole situation, some of my other positions went down. But the loss of profit, because all of these trades were in profit, so the loss of profit that I had on these positions is actually smaller than the profit itself that I made on GBPN. So even though the portfolio turned to the downside, because of the fact that I was able to take this great trade on GBPN and have a good risk reward ratio, I was able to make more money than the loss of profit that I lost on the other position. So overall, I come out very profitable of this situation. And so this really just shows you how to actually trade and manage your positions like a professional, right? If you know what you're doing, even when things supposedly, you know, turn against you, you can still come out profitable if you are really good at timing the trades and knowing which direction the market is more probable to go to. So that's pretty much it for the trade breakdown. So we really saw everything, you know, we saw the fundamental analysis, which I kept simple, but really it doesn't have to be much more complex. I was just waiting for a catalyst to the downside on this pair, which came in on the last Wednesday. And then I took a technical breakout along. And so the lesson here that you really need to understand is that the best moves really come when you have fundamentals and technical showing the same direction. So that's it for the video. If you guys enjoyed the video, don't forget to leave a like on it. If you have any questions, drop them in the comment below. That will be a pleasure to answer you. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.